Gold is fighting back after a slump caused by positive employment and wage data from the US. Well, as we know, any sense of market calm is bad news for gold. However, thanks to fresh comments made by Theresa May on a possible hard Brexit, safe havens were back in fashion, and gold is always in vogue in these moments. But as I say, they are indeed moments, and that will there be any more moments? That's what we want to know. I'm going to ask John Butler of Gold Money just here. It's not been brilliant for gold, has it? I did mention a resurgence, but it's a minor one.
Indeed, following a very, very impressive start to 2016. I mean, the year really ended with a dud, and gold did not do well. And I think there are two good explanations for why gold really struggled in the fourth quarter of last year. The first of which was the surprising Trump victory in the presidential election. I mean, notwithstanding all the uncertainties around Trump and, oh my God, what are his policies actually going to be? One thing he was fairly consistent on was being generally pro-business, cutting corporate taxes, potentially allowing for a repatriation of foreign accumulated corporate profits, things that, other factors equal, boost the stock market. And if you're willing to take a bit more risk in the stock market because it seems that the conditions have improved or are a bit friendlier from a regulatory and fiscal and government point of view, then you're less interested in the safe haven of gold. So that's one. The other one, however, was also that the Federal Reserve kept talking hawkish. You mentioned wages. You mentioned the labor market.
Yeah.
Yes, the data's been on balance, suggesting that conditions in in the labor market and the economy are improving. The Fed will therefore keep raising interest rates, and other factors equal. If interest rates are going up, it's less interesting to hold gold that doesn't pay any interest. So there were two good reasons why gold slumped. That said, it is beginning to come back. First of all, people, I believe, are beginning to question just how many times the Fed really can raise interest rates, number one. And number two, they're also questioning whether maybe the physical expansion that Trump is talking about is going to so massively increase the deficit and the debt of the U.S. That will, in fact, deteriorate the United States' financial position going forward, something which could be gold supportive.
Okay, let's move away from the US at the moment, because there's other factors at play. I mentioned Theresa May too, because there's tons of uncertainty in Europe. Not only the Brexit situation, the Article 50, but also European elections. Do you think that will play into the price of gold?
It is a big year for European elections. And in fact, you could argue that vis-a-vis what's happening in Italy and France, Brexit's almost a sideshow. The UK was never in the euro.
Yeah.
Right? They never were. And indeed, one could argue that depending on what happens with Brexit, that the UK will still retain a very, very healthy trade relationship with the EU. I mean, the UK and Europe have traded with each other extensively for all of European recorded history. That's not going to suddenly come to an end because of Brexit. However, you look at what's happening in Italy, you look at what's happening in France. These are two founding members of what became the European Union who have very substantial, very dynamic populist political movements in the ascendant, which are calling for an end to the euro.
Scary, isn't it?
It is.
You're a gold man. What levels are we talking about here?
Well, if you look at a chart, we're trying to come back from the lower end of a range, which has been tested on multiple occasions over the past several years. Now, usually when you put in what someone might call a triple bottom or a quadruple bottom or one of these things, you're saying, hey, there's really strong support there. The market does want to go up. The problem is that gold also seems to get slammed every time that it passes through around $1,200, $1,250. So you're talking about a range now that's held for an awfully long time. And you're going to have some new argument, some new catalyst for gold to truly break out to the upside and reestablish the uptrend that prevailed prior to 2011. We're not seeing any evidence of that yet. That said, the fundamentals, as just discussed, I believe are supportive for gold. I do believe gold will try to find its way back into an uptrend. But until we really break materially higher, we're going to be stuck in what is this range that literally has prevailed for about 3 years now.
And do you think we could have 3 years more potentially then?
I don't think so. When I step back and look at the state of the world, I see too many reasons why people are going to be concerned about economic volatility generally, foreign exchange volatility generally, possibly the imposition of capital controls not only in China but in other countries, the currency wars also perhaps morphing into trade wars, something that happened in the 1930s. We don't want to see that. I'm not suggesting that or advocating that I want that to happen, but boy, that would be very positive for gold. gold.
Oh, it would indeed. I suppose that's the only thing that gold's got going for it right now, is the fact that it is the safe haven. It's where you go when everything is in turmoil. But can you really make money off of gold these days?
Well, it depends on what you mean by make money.
Everyone wants to get rich.
Of course they do, but they also want to not lose what they've accumulated. Look at stock market valuations. They're elevated in a historical perspective. Look at bond market valuations. Bond yields are low in a historical perspective. Look at the property market. I mean, it's not just London. There are many places around the world where property is very, very expensive relative to the incomes of the people servicing those mortgages. If you're concerned about all of the above, you buy gold. That's the safe haven.
Okay, buy gold, we'll leave it there. You can't say much more, can you? That's John Butler there talking to us from Gold Money today about gold in 2017.